Hey guys, happy Saturday. I know this is not Friday. We had some issues yesterday for our Finance Friday show, thanks to FPL and the rain and all things technical difficulties. So I'm really sorry, but this is Finance Friday on a Saturday. I'm Amy Novakovich, and this is the show where we give you helpful information to help better your financial situation and help you have all of the information that you need to not get taken advantage of. Hey, Johnny. So I only have a few minutes because I'm actually at church. So if you're in town, I highly suggest you come out to Living Waters and give church a try. If you're feeling, not so great on a rainy, stormy day, come on out. Anyway, okay, so life insurance. This is a question that actually I get a lot about life insurance because, first of all, there are people out there that sell only life insurance. So they're like a life insurance specialist. And then there's people like me that actually are licensed to do life insurance, and it's just a piece of the overall financial advice that we give. So people get confused, about where does life insurance fit in? If I have life insurance, what does it do for me? How much do I need? All these questions. So we're going to break it down. First of all, instead of going over all the different types, I'm keeping it very simple. We're going to break it down. Does the life insurance last you for a specified period of time, or does it last you for your whole life? Okay? And I'll get into, once I explain the basics of what life insurance is, the two different types, and I have a little example here too. Then I will get into, do I need life insurance, and if so, how much do I need? So term insurance only lasts you for, you got it, a specific term, right? So it might only be 10 years, it might be 20 years. You're paying for it, and when the term is up, now you have to decide what to do. Do I keep it? Do I get rid of it? Do I pay the premiums? Because now the premiums are going to go up, so your premiums are guaranteed and the premiums, by the way, are the bill that you pay to keep the insurance, to have the insurance. So term is only temporary unless you do something after the term is up. Now, there's permanent insurance, also known as whole life, universal life, variable universal life. There's different types of permanent insurance policies that are meant to last you your whole life. Not all of them are guaranteed, but that is the overall purpose. Is it wasn't just supposed to be for a specified term. It was supposed to be for at least your life expectancy, maybe to age 80, maybe to age 100, but it's more permanent. So I compare the two. Permanent life insurance is more like an asset. You can actually build cash value. Let me turn that air down. You can actually build cash value and build up an asset. And I'll go over an example. I have a coffee cup and some cookies here in just one second. And then term is more like renting. So if you own a home versus renting a home. Owning a home, you can do what you want with it. You can sell it, you can rent it out, you're in control essentially. You can change all the way it looks, you can add on. So there's all kinds of different things that you can do when you own. When you rent, you really just pay the bill and you get to use it while you have it, right? While your lease is going on. So I have this little example here. So I have some cookies that I already opened and a coffee cup, okay? So term insurance, right? I pay the company a bill, just like car insurance. I pay the company. There, you guys hopefully can hear me. I'll keep going. I'm not going to eat this cookie in front of you, but you get the point. So I would eat the cookies. The cookies are gone. So all I have when I die, you get the coffee cup. The cookies are gone. The money that you paid is gone. It went towards nothing other than if you died within the term, guess what? You get the coffee cup. Okay? It's that easy. You die, you get the benefit that you paid for. Now, permanent insurance, the cookies go in the cup. Okay? So the cookies build up. I have multiple cookies, right? So they build up. Now I've got cookies in the cup, and the cookies keep building up. And because I own this, now I can choose to do what I want. I can take the cash out of the policy and use it, so I could take a cookie out if I wanted to. And on top of that, also, if I die, I get the coffee cup. So I kind of get the best of all worlds. Not to mention, if you, just lost the lid. if you die at any time, as long as you were paying those premiums, as long as you were putting the cookies in the cup, you get this. On term, the cookies are already eaten, and all you do is you have to die by the time that term is up, or you don't get the coffee cup. So, now, how do I know if I need life insurance or not? Well, let me ask you this, and I'm going to say it twice. If you died today, do you have enough in just cash investments, retirement accounts? Do you have enough in assets to take care of everything that you want to take care of? Let me say that again. If you died today, do you have enough in assets, cash, investments, retirement accounts? If you died today, will all those assets cover everything that you want to get done? So life insurance can be a useful tool, and I'm not recommending anything. I'm not saying this is for everybody, because it's not. But if you are married, I'll give you a few examples. If you're married and your spouse is not working and you provide all the income, if you died, how does your spouse live? They have to go out and get a job like immediately? How do they pay the bills immediately? Do they immediately go get the kids daycare? I mean, wouldn't it be nice to pay a smaller premium to an insurance company that says, if you die prematurely, this amount will actually go to take care of that, to replace your income until your spouse can get a job. Another example is debt. So if you have a lot of debt, you're married, you have a lot of debt. If I died today, is his or her income enough to pay for all the debt? Wouldn't it be nice if I just paid a very small premium, I shouldn't say very small, a relatively small premium to the death benefit, to the benefit that you get at death? So it's all relative. It's relatively small to the death benefit. If the death benefit can help pay for debt, it might be worth that little premium. Same thing for kids' college. You have a bunch of kids you want to put through college. You have grandkids you want to put through college. You die, instead of you putting money aside, if you die tomorrow, that money that you were putting aside isn't quite to where you wanted it to be yet, versus if you put in a life insurance policy, it gets you there real quick. Okay, so you're essentially paying the insurance company to get you caught up, to get a higher amount than what you have right now if you die before you're expecting to die. Okay? Hey, Adam. So I'm going to say that again. Life insurance catches you up. If you don't have enough assets that if you die today, you can do everything that you want to do, you can pay a life insurance company to make that space up for you. So instead of just saving over time and saving up $500,000, maybe I pay, and I'm making this up. It depends on your age. It depends on your health. Maybe I pay $2,000 a year, and if I die tomorrow, that $500,000 is there instead of trying to save up for $500,000 over 10, 15, 20 years. Now, how do I know how much life insurance I have? Well, it depends on your goal, right? So if my goal is to pay off debt, it might be good to have enough to pay off your debt, right? If your goal is to pay off estate taxes, so a lot of our wealthier clients used to have big issues with estate taxes, now not as much. But if your goal was estate taxes, you calculate how much an estate tax your family would owe. Nowadays, there's also a third moving piece to life insurance, okay? So we talked about term insurance, which is just kind of temporary. It's good for families that are growing, that you don't really have a ton of money to put into stuff like this. Term is cheaper because it doesn't last your whole life. It just lasts for the specified term. But it's not an asset. It's like renting. It's like renting a house. It's like these cookies. The insurance company is eating your cookies. The cookies are gone. The money is gone. It's just a matter of, if you die, by the time the term is up, you get the cup. But the cookies are gone. Permanent insurance, the cookies are in there. You could have used it for cash. You could have taken a loan out against it. There's a lot of things that you can do with permanent insurance, but it's more expensive. So, how much do I need? Again, depends on your goal. If you want to send your kids to college, I highly suggest you sit down and calculate how much it might cost for your children to go to college, and you might need that much in life insurance. You have to have a goal. I hate vehicle. I have mixed feelings about that. Life insurance can be a piece of an overall pie, like if you already have retirement accounts, if you have taxable retirement accounts, if you have cash assets, if you have, non-retirement investment accounts, because there's obviously investment accounts that are in a retirement account and there's investment accounts that are not retirement account. If you have a little bit of everything, then you can say, okay, well, let's throw in a life insurance piece, because that's a piece that I don't have yet in your overall investment portfolio. But please, I really wouldn't have just life insurance as investments, even if they're different types of policies. Life insurance has fees. I mean, you're paying for death benefit. Hello, you're paying for riders. Sometimes you can add long-term care riders to life insurance, which actually has been a pretty popular thing to do lately, because now life insurance, the name is kind of funny. It's called life insurance, but really, isn't it death insurance? You're insuring against dying. You're insuring against death. That's what life insurance is. But now, if you add a long-term care rider, now you can use that actually during your life. You can start taking out part of the death benefit while you're living for long-term care. This is not on a term policy. This is, again, on a policy you own, a permanent policy. So more like whole life, universal life, variable universal life. So life insurance, you have to have a purpose. We'll recap and then I'll wrap this up. You have to have a purpose. Maybe it's pay off debt if I die prematurely to help my spouse out. Maybe it's send my kids to college. Maybe it's to pay just to leave a legacy. I just want to pay to bury me and leave a legacy. You have to sit back and say, how much do I need? Because there is such a thing as over-insuring yourself. You're just paying fees for a bunch of death insurance that goes at your death to all these people. Could those premiums have been better used for you while you were living? You have to ask yourself that question. So when do I need life insurance? Again, recap. When do I need life insurance? Well, do all the assets that you have right now, if you died today, would all those assets take care of everything that you want to take care of? Pay off debt, supplement your income. If you no longer have your income, how does your spouse get income? That's where life insurance can catch you up real quick. So life insurance is used to get those wishes done if all your assets right now aren't enough. It's called leverage. You're leveraging up your cash. You're paying a little to get a lot if something should happen to you. Okay, and then how much do I need? You gotta think about this. What's the goal? Well, what's the goal? Calculate how much you need by saying, what is the goal of the life insurance? Don't just blindly get life insurance. You have to know the goal to know how much you should own, to know how much you should pay. Those three things go together. So if you have any questions, reach out, novawealthmanagement.com, Amy at Nova Wealth Management. Follow me on Twitter at NovakovicAmy. And I have some quick YouTube videos that I can try to break this down into like 90-second chunks, because I realized this was like, 11, 12 minutes. But I'll do little YouTube videos to break it down into chunks. But it's not that complicated, but at the same time, it's a very important decision, because if you get to a point where you're not healthy enough, you can't get it. Term insurance, you can if you pay for it. A lot of times there's online places that will give you term insurance no matter what your health, but you're paying a lot of money for that. But if you want to get permanent insurance, you got to do it while you're healthy. Otherwise, you're called uninsurable. So there has to be a thought process behind this. So it's a simple concept as far as, okay, well, the insurance company will catch me up on what I can't take care of in my assets. If I die today, the insurance company can make up for that for me. Simple concept, but you gotta be aware of what's the goal, to know how much that you need to fund that goal, to know how much you should pay. Is it worth the payment, and is that payment better off somewhere else in my investment strategy? Hey, Hallie, I'm just wrapping it up. So you guys have an awesome weekend. If you have any questions, again, Amy at NovaWealthManagement.com, and I will see you